Really, these are the two events we've been waiting on, man. I mean, theoretically, this should be it, and then it should be the end of the year from here, right? But 2022 is not going out like that.
So I'm calling it the bottom's in.
Yeah, bottom's in. Oh,
from
so
here
many
on forward.
times.
The bottom's 38.90. 38.90. The bottom
For this year, you're saying?
Yep.
Yes, of course.
Okay. Has the soft landing dragons finally slayed? Everybody kept saying, like, we're going to have a soft landing. It's going to be fine. We're going to raise all these rates, but it's not going to break anything. I think that ideology might be out the window now. Let's move ahead.
Okay. Can you please break down the title for me first?
Oh, yeah. So, this whole idea of a soft landing, everybody was saying that they can keep raising rates, but it'll be fine. It's not like the idea of a hard landing, meaning markets are just going to tank because the more we raise rates, the more all of these tech stocks and all these other different things that get affected by raising rates, it's going to really create a situation. That's the hard landing situation, right? But people have been saying, well, it's going to be a soft landing. It's going to be fine. Like, the markets aren't going to be too affected by the idea of raising rates. And look where we are, right? Like, Well, I think that ideology is gone now.
And that's where you're getting the dragon finally slayed.
Yeah, I just threw a dragon in there and made it interesting. And let's just call it a dragon. I mean,
Why not?
Why not?
I like it.
Why not? If you see this title, you're going to find it interesting. What the hell is he talking about?
Yeah, that's a hook title. I was like, the dragon.
I know. Yeah, I know. I do that every now and again.
You're allowed.
Yeah. Well, we had that CPI this week. It's the first time since COVID that core inflation declined, but it's still high, right? Like, I think that we got to make sure we say that. Like, inflation is still a thing and it's still high. It's not like it's down. It's not like it doesn't exist. FOMC and EC. I'm sorry, I was a little thrown off. My kid just called me for some reason, but I think my wife's got it. I'm not worried about it.
The one in college?
No. He actually came home last night. I know. We're never going to get through this. He came home last night at like 5-something in the morning. We're like, what the hell? We saw something at the back door ring thing. He came home like 5-something in the morning. He's done with his finals. Yeah, this guy.
Oh.
He's just like, he hangs out with friends and then he just, they have a good time and then he just hops on a bus and he comes home.
Oh my goodness.
Good for him.
Yeah, good for him.
Your high schooler or junior high that called you?
No, that was my little guy. He called us, but it's because he needs his instrument. Don't worry.
Look, now your little guy is like, he's 9, right? Or something?
Oh. He's 10 and he looks like he's 13. Yeah.
Yeah, right.
FOMC, ECB, BOE, they all raised rates 50 basis points and they all didn't give good outlooks at the end of it, which means we're going to keep seeing at least rate hikes for a little bit. They might not be the 75 basis point variety, but they're still going to be rate hikes. So get used to it is basically what they're saying.
They said there shall be more pain. It shall be inflicted upon all of us.
Shall be more pain. It shall be inflicted on you. It's, you know what I mean? Hit you with the water.
Yeah.
Dollar. They erased its losses from CPI, which is interesting. I mean, like during that November CPI that we had more recently, the dollar had a big move. Since then, dollar's still kind of on the downside, basically. Still pretty weak, it seems like. And most yields are lower on the week, too, if you've noticed. You guys notice that?
Go ahead. I did not.
I didn't either. That's what I'm saying. I didn't realize they were, and I actually have a position in it. I didn't notice anything moving.
Yeah, it's kind of weird. I mean, as much as we've dropped, right? Like that's been the year. Most of the time yields go up. We've been, that's kind of that weird dynamic this year, right? Yields go up, markets have been down. Well, as much as we've been down this week, yields are actually kind of down on the week. We'll see what today holds.
Well, bonds have been going higher. I don't look at it from a weekly kind of point of view, but it makes sense. I mean, you got bonds trading 131 almost, right? I mean, it started 2 weeks ago 128 or less. I mean, so as bonds go up, yields have to go down. The short end of the curve has got to be the most volatile, right?
Yes, for sure. Yeah. For sure. Absolutely. It's just weird, though, right? That, like I said, most of the year, yields have been exploding and then stocks have been tanking. Well, we've tanked this week, but yields are actually still down.
Sure.
But again, I think the CPI had something to do with that as well, oddly enough. But you're right. I got a chart on bonds in a second, too.
Yep.
You guys will like this one. Percentage of days where SPX and VIX are both down has hit a multi-decade high. About 19% of the time that has happened this year. And the most recent time where it had done this was, when was that? 2001, I think, is from a chart that I saw. But the most recent high was 14% of the time it did this. So The whole point of this is most of the time people are saying, oh, the days that are, we've seen this a lot, right? Like days where the SPX, even yesterday, where SPX was down big, VIX was not up that big, right? We've seen plenty of days where SPX has been down and VIX has been down.
So that is a fascinating statistic to me, because that is it. We were talking about this yesterday on the show. Is that just saying that, hey, 100-point moves are just the norm now?
I would have to agree with that. To some degree, I would have to say that's part of it. And I think also too, when you think back to earlier this year and, say about April, May, where, the Ukraine Russia thing, which was really why VIX was trading over 30 or whatever, but then it started to fall as we started to normalize what was happening. I think that's part of it too. Like things weren't as bad, volatility wise as it appeared. And so we did have those days where even though we were down and we thought VIX should be moving more, it wasn't moving to the amount that VIX was saying the market should be. So, for example, VIX is 24. That always means 1.5% moves in either direction. If we move down 1%, I don't think VIX should go higher. I think it should go lower. You know what I mean? And I think we've had a lot of those days where VIX was a lot more elevated than the market would suggest it should be.
Yeah, I see what you're saying.
Which has opened up a lot of nice opportunities. If you're looking to sell premium, it really, I think the beginning of the year was harder to make money than the last 6 months of the year from a selling premium standpoint. Now, you may have caught some things right on direction and, your whole year was great or your whole year was bad. But I think from just looking back in hindsight, the last half of the year, at least for me, was a lot easier than the first half of the year.
The first half of the year was ridiculous.
Well, that's one way. That's one way of saying it too.
It was ridiculous, and so I wrote I shouldn't be writing anything, but somebody asked me to write a blog. And that's what I wrote about, saying that on paper, if you look at the first half of the year, if you ask me, you got high implied volatility, you got this, you got that. On paper, it sounds like a tasty trade or a tasty's dream, but that it's not. It didn't work out that way.
Yep.
I made no money selling premium in the first half of the year.
Yep.
Yeah. Hard times. VIX and VVIX, they both climbed this week. VIX futures are still in backwardation, though. So, it may seem like volatility is climbing higher, but still kind of calm. Let's move ahead. Got some charts. You talked about bonds. Gold in the 30-year bond has been fairly correlated. I'm not going to lie. I didn't notice this myself. I got to give shouts to Mr. Victor Jones. Victor noticed it. And Victor's like, you know what? Just watch 30-year bonds. They've been tracking. And now we all know things work until they don't. But this has been a thing. I didn't know. Did you guys know this?
No.
Mm-mm.
Yeah, kind of interesting. I mean, they've been following each other.
What is their correlation? Do they have a...
It's 0.5 currently, right now.
Okay.
Yeah.
Gold GLD or /GC, the Ivy rank in there has been in the teens is like a high. I mean, right now it's 3 or 4. So I haven't watched a lot of gold. Like I just haven't, not been on my radar for years.
Yeah, I watch the price action because, just every day just to see. Okay,
I quote it every day, but it's kind of like just a quote. It's almost like an almost ran.
So I look at gold all the time, and that's only because it's burned into my brain from my father. So, like the old school investors, silver and gold, know where they are. If you keep it in your mattress, like that is still burned into my brain. So I'm always looking at gold.
I'm kind of I'm in between both of you. I always look at it, but I don't know the last time I've traded it. And to that point, where's an area where you get interested in gold, period? Like where that's IVR side. Where's a number where you get interested?
Well, I don't look at GLD per se. I mean, I know where GLD is, but I trade, your miners. I'll trade GDX and GDXJ quite a bit.
Okay.
And I usually almost always have a position in. So it doesn't really matter if I'm bullish or bearish. I'll trade both sides of it. I just always typically have a GDX position in.
Yeah, I haven't traded.
I don't know why. I just like to have it in. I like to have that in my portfolio.
It's funny.
But I'll change my position based on the IVR. So there's really no entrance point for me. Sometimes I'll look at this and be like, oh, it's a little high. I'll do something that I'm neutral to bearish in. You know what I mean? Just kind of playing both sides of GDX.
I probably haven't had a gold position in like 5 to 7 years.
And I think it's also because one year GDX was like the belle of my ball. I opened up my P&L at the end of the year and I was like, what did I do in gold this year? This thing's amazing. So I just stuck with it from that point on, just to kind of have in my account because it's always something to look at.
True. The belle of the ball. I like that. Let's move ahead, John. The belle of the ball. You're going to be the belle of the ball. That's fun. That was in one of the rush hours.
That's something they've never told. That's something they've never told me.
Yeah, it's now I'm gonna have everybody looking this up. Rush Hour 2 is probably my favorite, and there's a part where him and Jackie Chan walk into this store. I know people on the chat know what I'm talking about. Him and Chris Tucker and Jackie Chan walk into a store, and Jeremy, what's dude's name from? He's from Chicago. God, what's his name? He was in what's the show where the guys were basically playing out Mark Wahlberg's life on HBO?
Oh, you're killing me, Smalls.
I know. What's the name of the show?
You got me.
You gotta put somebody. Got to put in. Guys, you know what? You guys know what show I'm talking about. It's on HBO. It was the Five Guys. It was
it's like Infamous or something like that. It's called
Entourage. Thank you. And Entourage. Jeremy Piven. Thank you, Seth Hansen.
It was a great show.
Jeremy Piven. So Chris Tucker, and this is way off topic. Chris Tucker and Jackie Chan walk into this store, and Jeremy Piven comes in. You guys ever seen it? He's like this dude. He's like this flamboyant dude, and he's like, he goes, "We need outfits. There's a lot of men chasing us." He's like, "As well, there should be." He's like, "Some people think it's tacky when couples dress alike, but I really think that you guys should do it. What do you need? You're the belle of the ball. What do you need?" And so that's when you said that, and made me think of that. I'm sorry.
I love it.
European stocks are actually trading higher than SPY since February 24th, since we had that issue in Russia, Ukraine. How about that? Can you believe that?
Really?
Really? At least this ETF is kind of interesting.
Wow.
It's really interesting, and I don't think anybody would have called it. How about the DAX? I guess I'm asking questions you don't know the answer to. That's crazy.
It's wild. Move
it is crazy if you think about it.
Do you guys trade FEZ?
No. I just literally pull it up and things like that just to compare it. But no, I don't trade it.
I just pulled it up. I've never actually looked at it. That's pretty interesting, though, Jamal.
Yeah,
it just goes to show you that nobody knows nothing. I mean, if you had to make a play, I think 8 times out of 10 people would have said, they're going to do worse than the U.S. And it's not true. Crazy.
Yeah.
Before we go through this one, what do you guys think about the idea of a recession? Do you think it's a possible thing? Do you think we're already in one? What are your thoughts on that?
I mean, aren't we already in one?
There's one opinion. Tone.
I think we're in it.
I mean, I'm gonna pull a page from Sosnov's book here. I mean, you never know you're in a recession until after they tell you were in a recession. But it certainly seems like prices have gone higher.
Don't you think
everywhere?
Don't you think enough people have told us we're in one that we're in one?
I guess it's a foregone self-fulfilling prophecy kind of thing. So sure.
So that's why I always kind of look at these. Of course, you can look at a lot of different curves. You can look at the 10 and the 2, which everybody looks at. This one theoretically is the one that has the largest chance of predicting recessions, the 10 and the 3-month, when this goes inverted, theoretically about, I don't remember, a large percentage of the time we will usually end up in a recession afterwards. I just bring this one up because it's interesting. It's been inverted greater than 50 basis points for over 15 consecutive days. Last couple of times that happened was 2007, prior to the 2008 recession, and then in 2001. So, and then, again, we talked about yields at the top of the show, how much they've decreased. The 10-year yield is down nearly 20 basis points this week. So it's under 3.5 now, I believe.
It is. I will look right now for you.
And yeah, I mean, the velocity with some of these near-term yields, I mean, 1 month, 3 month, 1 year. Wow.
How can I find the 3-month yield?
I don't know, actually.
There are sites. I don't have it at my ready, but I can tell you that basically 4 to 20-week paper was trading over 4%. Just a couple of days ago.
Because I mean, I look at the 10-year, 2-year like it's going out of style because I have a position on in it, but I don't look at the 10-year, 3-month.
Yeah, you're saying, how can you look at the 3-month? Like you're saying, like a future thing?
Yeah, yield. Like, how can I find out where it is?
Or just the yield?
It's posted once a year on some Fed once a day on some Fed website. I could try to find it for you.
That's okay. It's not a tradable. If it's not a tradable product,
and Dr. Data can always pull it up for you too, and from the research hub, he has all the yields currently where they are in the research hub.
Yes, that's true.
Let's move ahead to the next slide. I love that you just said ready machine. First of all, We had a couple of those when I was at a prop trading firm, and they used to scare the hell out of me in the beginning because you had to know what you were doing. You had to know exactly, they were all drop down boxes, right? Like you couldn't, and the big thing back then was you couldn't make a mistake, of course. And so there were all these different individual things you had to pick. I remember they used to scare the hell out of us as trading as assistants. Oh my God. But once you got it, you got it. People would come to you all the time. Hey, get this up. Could you get this up for me? I'm ready to fire these off. No problem. Boom, 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 boom. Whatever. On the bright side of this year, the number of bankruptcy filings has been relatively low. When you look at recent history, look at 2020, we had 602 through November 30th. And then for the rest of the year, you had 36. But of course, 2010 stands out. But I mean, this year, pretty low, right? Fairly low, you would have made. So that's a pretty good thing.
Yeah. As of 48 hours ago, the yield for 13 weeks was 4.38, and for 26 weeks was 4.8.
Oh.
Treasury, that's Treasuries, just Treasury bill auction.
13 weeks, is that like 3 months?
Yes.
Why are you making me do math like that, man?
I'm sorry.
Damn weeks are in 3 months. No.
Quit trying to make us do that, Tony. Stop it.
Sorry. I apologize.
That's like making us do fractions. You guys do fractions, and I was.
I'm sorry.
Did you have to do the fractions?
No, I didn't. No.
Oh, God.
It was all decimalization for you when you
I used to be able to add and subtract fractions like they were going out of style.
And I remember, we can move to the final slide, John. I remember the first time when things started going to pennies, I just was the dudes they were just so pissed off. Man, SPY's going to pennies, man. Can you believe this? I was like, what's the problem? I didn't understand quite yet, the idea of liquidity and the ability to make money on the spread. And he was just like, you just don't get it, man. It's just ridiculous, man. He was so mad.
You want markets you can drive a truck through when you're on the trading floor.
Yeah. OPEX today is going to see 3.7 trillion options expire. A lot of people have been saying 4. It is what it is, but a lot, right? We saw 2.1 trillion in November. We might, obviously we're clearly already seeing the move. We'll see what ends up happening if we even rebound, if we go lower, but be aware. Okay. Tesla's recent drop, do you guys think that maybe it has something to do with he's doing too much? That's what they keep talking about. Is that a big deal, or is it just a matter of right now there's a lot of competition more so?
He keeps selling stock too, which also doesn't put any confidence in the stock. What did he sell yesterday, Tony? Didn't Panetta say he sold?
I look at this completely different, okay? I think he's probably, the whole Twitter thing has put a little bit of a fork in the road for him for a short period of time, and I think he's paying a decent price for it. Every CEO from Apple on has sold stock in their company, and probably a lot earlier than 3, 4, or 5 splits that Tesla has had. I don't see any problem with it at all. It's a short term, in my opinion, opportunity in the stock for everyone. If you've been bullish on Tesla and you haven't gotten in, you got a great opportunity to get in, quote unquote, a lot cheaper than it's been. And if you've had any longs in Tesla, you rode it too far. You know what I mean? There's a buy and a sell, but you're still probably have a decent outlook on Tesla. Tesla this morning, if you look at it, is actually up today. It was up yesterday with all the news. I think news is such bullshit. By the time they tell you that he's selling stock, it's over and it's done with. And by the time they tell you, it's time to buy something, it's time to sell it. It seems like it's a reverse indicator to everything, not just alone to this, but to everything.
Are you bullish or bearish on Tesla?
I put on a an omnidirectional trade in Tesla. For me, it was, buy 1 put, sell 2 puts. I did it on my podcast. I did it for $2.10. It's trading for $1.85.
Was it the 40-30 ratio spread? The 40-30 ratio spread?
The 1/2 ratio spread, yes.
We call that the Batista special on ours. We call it the Batista, the 40-30.
It has an 80-90 probability of success, and I could make $1.
The Batista special, I love it.
It's where I live. It's where I live.
One last thing. Historically, there's a 5-month lag between peak CPI and the final Fed hike.
Yeah, go back. I would like to see. Yeah, sorry. Okay, so
one most important thing is there's usually a 5-month lag between the final peak CPI, which maybe we've already had it, and the final Fed hike. So we'll see. could
Wait,
happen.
wait. So I feel like this is the most important statement that you got here. Can you say that?
The 8.8% CPI, I think, was the highest we've had so far, unless we're going to go higher. And historically, there's a 5-month lag between the high end CPI and the final Fed hike. So
which just got put in. So you think, so if I'm understanding what you're saying, so we just put in the CPI. You think within 5 months we'll have the last?
I don't think anything. It's just historically.
That's what words in your mouth. But historically, so then we'll have 5 months, and then that'll be peak inflation.
Theoretically, it could be the last. Theoretically, the last rate hike could end up being in, I think, March or whatever. We have one in February, and then we have another one in March. Right now, they're pricing for no rate hike at all in May. We'll see.
Okay.
Awesome, Jamal. I gotta let you go so I can catch the opening bell. You only got about 90 seconds this time. Legit. We'll be back.
Peace.